It all started on a Tuesday. I was scrolling through my phone, checking my crypto portfolio, nothing special, just the usual ups and downs. I'd bought some Bitcoin, a little Ethereum, and a few altcoins. I told myself I was playing the long game, hodling. But patience is hard when you see stories online, people turning a few $100 into fortunes overnight. That's when I saw it, a post on X, a trader flaunting a screenshot, huge profits, and the words 100x leverage, 100 times. It sounded like a cheat code for the markets. I imagined my small investment multiplied by 100. The thought was intoxicating. It felt like everyone else had a secret elevator to the top, while I was stuck on the stairs. I dove into research, feeling both excited and a little scared. My friend Alex warned me, "Dude, be careful with leverage, it's not a toy." But ambition drowned out caution. I thought, I'll be smart, I'll win big. Classic beginner's mistake, overconfidence. In crypto, the fine print is invisible and can cost you everything. I signed up for an exchange offering leverage. The interface was intimidating: charts, order books, terms I barely understood. But there it was, the 100x button, shining like a beacon. I was so focused on the potential reward, I barely considered the risk. The allure of quick, massive profits was too strong to ignore. I was ready to take the plunge, convinced I'd found my shortcut to riches. The truth? I was standing at the edge, looking down, not realizing how far I could fall. The promise of 100x gains was just too tempting. I ignored the warnings and clicked forward. The journey had begun, and I had no idea what was coming next. Sometimes the biggest risks are the ones you don't see. And in crypto, the fall can be fast and final. So, what is leverage? At its core, it's borrowing money to make a bigger bet. Imagine you have $100, but the exchange lets you trade as if you have $1,000. That's 10x leverage. Your gains and losses are multiplied. In crypto, the exchange provides the borrowed funds, using your money as collateral. The more leverage you use, the bigger your position, and the bigger your risk. Go long if you think the price will rise, short if you think it'll fall. Leverage turns small market moves into big wins, or big losses. The exchange always protects itself first, with rules designed to keep their money safe. It's a high-stakes game, and the odds aren't always in your favor. Leverage is powerful, but it's not magic. It's risk, multiplied. Let's simplify. Say you want a $100 coffee maker, but you only have $10. Your friend lends you $90. If the coffee maker's value doubles, you sell for $200, pay back $90, and walk away with $110, a $100 profit from just $10. That's the dream of leverage, small investment, big return. But what if the coffee maker drops to $50? You sell, pay your friend $50, but still owe $40. You lose more than you started with. In crypto, the exchange won't let you owe them. If your asset's value drops to what you borrowed, they liquidate your position. Take your collateral and close your trade. You're wrecked. Your initial investment is gone in a flash. Leverage magnifies both gains and losses. The exchange always gets paid first. Liquidation is instant and unforgiving. The risk is real. You can lose everything, fast. Leverage is a tool, not a guarantee. For every winner, there's a loser. The dream is real, but so is the danger. Know the rules before you play. In leverage, the stakes are always higher than they seem. Why do traders use leverage? Simple. The chance for massive fast profits. In spot trading, you need the price to double your money. With leverage, a tiny move can do the same. Use 20x leverage, and a 5% price move can double your investment, sometimes in a single day. For those with small capital, leverage feels like a shortcut to big gains. Even a $100 account can control a $5,000 position with 50x leverage. Leverage also lets you profit when prices fall, by shorting. Skilled traders can win in both bull and bear markets. The dream: master the market, profit from volatility, and turn small moves into big wins. But every shortcut has a cost. Leverage is tempting, especially for those chasing quick riches. It promises the big leagues, even if you're starting small, but the higher you climb, the harder the fall. For every dream of big gains, there's a nightmare of even bigger losses. Leverage multiplies losses just as fast as profits. With 20x leverage, a 5% move against you wipes out your entire investment. At 100x, a 1% move can liquidate you instantly. Crypto is volatile. Big swings happen in minutes. Liquidation is the exchange's way of protecting itself. Your position closes, your money is gone. Even if you're right about the trend, a sudden wick can wipe you out before the market moves your way. The psychological pressure is intense. Small dips feel huge. Most beginners lose everything fast. The market punishes overconfidence and lack of risk management harshly. Heard the dream and the nightmare? Here's how not to get wrecked. Learn before you earn. Start with paper trading. Practice with fake money. When you go real, use only what you can afford to lose. Start with very low leverage. 2x or 3x, not 100x. Always use a stop loss. It's your safety net limiting your losses. Never trade without a plan or risk management. For most, the best path is slow and steady. Buy good projects, hold long-term, and ignore the hype. Leverage is for pros, not beginners. The temptation will always be there, but so will the risk. Build your knowledge, respect the danger, and protect your capital. That's how you survive and thrive in crypto. Don't chase shortcuts, play the long game. In the end, smart choices win.